Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back once again to the Fintech Times News and Views podcast. I forgot the word for podcast. That's really embarrassing considering that's what it is. Hello, Francis and Tom. How are you guys doing today? Tom, what is up?
I am doing very well. What is up? It's been a busy week, actually. Normally, I just say, we've had a lot of news. Yesterday, at the time of recording, I was at Open Banking Expo. If you were there, you might have even caught me on stage, moderating a panel on the main stage. I know I've hit the big time.
That is a shameless plug if I've ever heard.
They're gonna have to start paying me more because I'm main stage material now. That's me.
That's big. Did anyone take any pictures?
There are a few pictures. None that are too flattering, so I won't be sharing them. But
they're never
there
flattering.
Are a few pictures.
They're just for Tom sleeping on stage. It's brilliant.
There was one. It looks like I'm sleeping, but I'm just blinking. I promise. But yeah, it's been a good week, and hoping to finish strong.
Amazing. That sounds fantastic. Francis, how about you? Any main stage material here, or?
I can't say I've been rocking the main stage. Instead, I've just been sort of holding down the fort. But it's been an enjoyable week. We've had a lot of good news come in, and I'm excited to talk about some of it today with you guys.
I suppose doing your job is fine. I guess that's okay. It's not main stage though, is it?
No, it's not. I will concede. I will concede that.
Anyway, jokes aside, thank you guys once again for joining me. What are we going to be talking about today? Francis, what have you brought?
So what I'm going to be talking about today is Binance and how it has restricted its UK services as it looks for a new approver.
Fantastic. And Tom, how about you?
Today I am going to be covering an article by the fabulous Francis, and it's despite good intentions, UK SMEs are struggling to be sustainable, finds a recent MasterCard report.
Fantastic. And then my thing today is a similar report, but not at all similar at all, about payments and the payment methods that merchants prefer using. So, I mean, anyone want to go first? I feel like Tom, Mr. Worldwide, now you can go first. Show us all how it's done with that main stage material.
Let's Mr. Worldwide go first. But so the MasterCard report that the article covers has revealed that small businesses in the UK are trying to be more sustainable, and they really want to embrace new technology to try and achieve their sustainability goals. However, due to rising costs, about 56% of these businesses are actually struggling to meet their sustainability goals at all. And essentially, MasterCard has found that the consumer push for enhanced sustainability practices from their financial institutions is being heard, as MasterCard reveals that 51% of SMEs have stated that sustainable practices are a top priority. And this figure grew when they looked specifically at younger business owners aged between 18 and 34, of which 70% marked it as an important factor. So with this in mind, it means that SMEs seem as though they should be making very good inroads towards improved sustainability. However, despite these fantastically good intentions, MasterCard reveals that 48% of these businesses state that costs are what's stopping them from adopting less damaging tech. So in response, MasterCard is hoping to support the smallest companies in the UK with its Strive UK program, which looks to connect small businesses to experts and advisors who can help them grow, build resilience, and tackle some of these biggest challenges head on. And one quote that I thought it would be important to touch on was by Mary Portas of the Better Business Act, who explained that a fundamental part of the UK's business population is being underestimated, and that's micro and small businesses. They provide 3/5 of the nation's jobs and account for half the turnover in the private sector. However, despite their commitment to sustainability, it counts for nothing if they aren't supported to achieve their net zero goals. This is a group that accounts for 99% of the country's businesses. And she says, if they don't hit their targets, none of us will. So with this in mind, I wanted to ask both of you where you think the solution lies. Obviously, SMEs, don't have the resources to implement new tech to improve their sustainability practices. So where do you guys think this kind of support should be coming from? So Francis, I'll come to you first.
I feel like a lot of the time people think, oh, if I don't have the latest technology, then I can't be inclusive and sort of, diverse and sort of have these sustainable practices as much, because they just think, oh, I can't afford it, I can't do it. But I feel like there's a lot of smaller things that can really be done to sort of help with sustainable practices. And I think one of the interesting things was the was Kerry McLaughlin, I think her name. I'm not sure how to pronounce her name properly, but she said that the research shows that merchants welcome diversification and that the industry is fostering innovation and security. And I think when you think about it like that, it's always really encouraging to see that in front of adversity and different challenges that are arising, merchants are still managing to sort of direct, I suppose, sustainable practices and sustainable. Oh, what's the word I'm looking for? It's not like culture, but like methodologies and like thoughts and practices, really. And I think that's always really encouraging. And I suppose when you think about how much help do organizations really need, I mean, there's always going to be a need for support to SMEs, but I do think it is really encouraging when you sort of see that, what was the stat? It was, I think, 18 to 34-year-olds are extremely, I can't remember the exact stat, but it was something along that they're extremely sustainable, right? Or they've got a sustainable first mentality. And I think when you think about things like that, I think it is really, really encouraging.
Yeah, exactly. And I think there is obviously some encouraging signs, even from this report, which states, that they're struggling with increasing costs. And I guess that goes beyond just the cost of new technology, but also, we're in an environment now where everything is rising in cost. And I think it's just really important to see exactly where we're going to be moving to in the future. So, Polly, what's your take on this? Do you think SME should be receiving more support, and if so, where should that support be coming from?
Yeah, I mean, it's a really tricky one. I mean, I agree with what Francis was just saying about how it's really encouraging to see that everyone's thinking about it, everyone's concerned about it, everyone says, yes, this is important. But obviously, saying, yes, it's important doesn't actually mean anything in the long run unless you're actually doing something in order to, enact it. And I think it's a really tricky situation because obviously I think small businesses and micro businesses, as you were saying, kind of get the short end of the stick in a lot of areas, and because they're so small, it sounds really stupid to say, but because they're so small in comparison to sort of their counterparts, they do kind of get left behind a little bit. And because they make up such a huge factor of the business population in the UK, I think it's a tricky one to try and tackle. I think more needs to be done by the big guys. I know a lot of a few banks offer like green loans and sustainability loans to help people on that, which is always a great one. I think NatWest comes to mind off the top of my head. They offer a lot of green loans. MasterCard is interesting to see that they've run this study, which you'd hope to mean that maybe they're going to be looking at doing something to help small businesses and really start some programs to help grow. So yeah, it's just a really tricky one, and I just hope that this good feeling and this idea of yes, it's important will translate into actual change. Because I like the piece said, the group of small businesses and micro businesses account for 99% of the country's businesses. So if they can hit their targets, then we're all golden. So I think it'll be a hopeful one to see moving forward as we all kind of look more at net zero and sustainability goals in the future.
Yeah, definitely. I think her comment was important because often you see that the regulators getting involved, when it comes to sustainability goals and things like that, with the biggest corporations to try and set an example. But actually, the biggest impact might be coming if they can impact all of these smallest businesses in the UK, then we might actually see a much bigger impact. So it'll be interesting to see how much this will be taken into account really in the coming future, and how much firms from all aspects of the industry, whether it be from the regulators, the government, from payment providers like MasterCard, who can step in. But wherever the support comes, it's surely going to sort of put people in the right direction and put SMEs in a good stead for the future.
Yeah, absolutely. Awesome. Francis, why don't you take it away with our next piece of the day?
Yeah, cheers, Polly. So the article that I wanted to discuss today is coming from one of the biggest crypto exchanges in the world, which is, of course, Binance. And I think we discussed it a few weeks ago, but if we didn't, the FCA, the Financial Conduct Authority in the UK, has introduced a new marketing regime for crypto assets, essentially, or crypto exchanges, or anyone in the crypto world that really is dealing with their marketing, essentially. And it means that they need to be completely transparent, and they basically they have to go through a bunch of different loopholes to essentially make sure their marketing is accurate and is really putting consumer safety first. Essentially, Binance, their market or promotion approver, was recently, it was also called the rebuildingsociety.com, or REBS. Following the FCA's launch of its new regime, REBS was no longer able to approve financial promotions for any crypto institution, including Binance, and it had to withdraw any existing approved promotions. So as a result, Binance has essentially said it's not going to be taking on any more UK consumers, and that it's basically just going to hit pause on all of its services in the UK. And as this has happened, it is looking for a new approver. And what I thought was really interesting about this is that while it may seem like a negative in the short term, because I mean, one of the comments that we got, actually, I believe, was from James Kotulas of Typhon Capital Management, and he was essentially explaining that although the firm is officially shut down, but that's not going to stop people. It's like the probation in the 1920s, like banning alcohol or banning something that people want. It never really works, and that people just go to underground, essentially, to facilitate their needs and what they want to do. So in that regard, I suppose you could say that Binance hitting pause is a pretty bad thing. But the way that I look at it is that the company is now doing everything it can to be compliant with the UK regulator. And in my head, as we've always heard about how cryptocurrency is always going against, regulations, because of its very nature of being sort of this global thing. It's very difficult to regulate locally. But I do think that in trying to, what's the word? To essentially just accept the FCA's new regulations and new rules and trying to abide by them, it's a really good sign for cryptocurrencies in the long run, as they are going to be moving away from this unreliable reputation and something that people can trust, I think. But I wanted to get your guys' views and see if you really agreed with me, or if you think it's actually perhaps not a very good thing considering the size of the exchange and how big its reach really is and the impact that it might have on other crypto firms. So yeah, no, Polly, I'll go to you first. What are your thoughts?
I love the comment comparing this situation and crypto regulation to alcohol prohibition in the 20s. I think that's really funny, but not true, to be honest with you. Yeah, absolutely right. Banning something never works ever. It just makes it a little bit more difficult for someone to get something. I think the situation is really interesting. I think it's really great to see crypto being taken so seriously in terms of from a consumer standpoint. Obviously, I know the FCA's new crypto asset marketing regime is all about keeping customers safe, as they have said, and they want to make sure that consumers are informed about their purchases as they make with crypto. So I think that's really great to see here. Obviously, it's caused this situation with Binance stopping accepting new UK users, but for me, I don't see it as a negative. I think I quite agree with some of the comments you had in the piece. I think obviously short term it might probably have a bit of an effect on the uptake of crypto in the UK. Binance is one of the biggest, if not the biggest, crypto exchange at the moment. So having that could affect the sort of crypto market. But I think it would be really cool to see more local and UK based platforms maybe taking up that mantle and filling the hole. I think that would be really awesome. Especially since obviously there's a little gap now with Binance there is space to come into the market and try and take over a little bit. There's a lot of potential for UK based crypto platforms, and I think that would be very interesting. Obviously, I think that does come with its own challenges of like regulation and anything like that. But no, I love that idea, and I love that there is going to be more positive strides for crypto in the UK. In spite of this, I think it could be a really interesting time to be in the UK crypto industry, or certainly at least watching what happens as the situation unfolds.
Yeah, 100%. And I think I probably should have clarified as well that existing UK users will retain the current services available, providing they have completed their investor declaration and appropriateness test. But any new products and services will not be made available to them during this period. And I do think that is really important as well, because it does hit pause. And I think that is the main idea, is that because any new services that come out, and of course the more new services you want, they're going to be the big selling points most likely. So restricting that from their existing consumers is really going to sort of drive a desire for, I guess, more change and for approval. So I do think everything they're doing is really, it might be a bit irritating in the short term, but I think in the long term it's going to really help the legitimacy and the reputation of an industry that has. I mean, all we have to do is look at FTX last year and or Terra Luna and the collapses that we've seen, and I think when you take those into consideration, this is a really good move to sort of rebuild that reputation. Tom, what are your thoughts?
I'll be honest, I didn't necessarily view it in the same way, in the sense of I saw it as a positive. I think Binance will definitely see it as a setback and not one that they would have willingly wanted to have partaken in. It's, almost forced upon them really by the new FCA regulations. So my first thought really was when I saw the announcement from Binance was, it's like another example of just how volatile the crypto world is. It just shows that the regulation is still not really fully established. They are having to stop onboarding new users because of new regulations, and they're not able to keep up with new regulations. And to me, it felt a bit like, it's just the crypto world does seem like a bit of a mess, even though we know new regulations are coming in to make consumers safer. I think my first instinct as a consumer, first and foremost, was just, oh yeah, this is just another case of the volatile crypto world and it being unpredictable, whether it be due to prices or regulations. So yeah, I think it's an interesting time. Obviously, you'd think something as big as Binance will be able to jump back in to getting UK users in fairly soon once it finds a suitable partner to approve its financial promotions. But yeah, my initial instinct at least was that this isn't really a good thing, and I like the point of where can UK firms kind of fill that void. But I don't know. I think the fact it is Binance, the fact it's the biggest one, is still encountering such significant problems. I, at least at this point in time, see perhaps more chance of just big setbacks for the crypto sector in the UK rather than opportunity. And it'll be interesting to see if I'm right or wrong about that over the coming months, I guess.
That's definitely a really interesting take, and it's nice not to be the one playing devil's advocate for once, and it's actually one of you two. But I definitely think you're right in the sense that it's not a good thing. I don't think any consumer who uses Binance or Binance itself really wanted to really have this clash with the FCA, albeit not a negatively reviewed clash as we sometimes hear about with crypto exchanges and regulators. However, I think, and I do see your point as well from a consumer standpoint, that or someone who's perhaps not so much in the know and sort of just associates crypto with the biggest exchanges like Coinbase, like Binance, and when they see that, crypto is essentially, or what that translates to, sorry, is crypto isn't allowed here, or we're not allowed to onboard crypto in this country. And I suppose when you look at it from that standpoint, I do very much see where you're coming from. But I would like to think that once they've got an approver, there's going to be this huge sort of campaign probably saying we are now FCA approved, we are trustworthy, we are, do you know what I mean? And I'd like to think that that will hopefully counteract maybe some of the negatives that have been created from simply not having the approval right now. But I do think that is a very valid point of view, and yeah, I think it would just be interesting to see how the industry in the UK really evolves from here. And yeah, Polly, we'll go to you for your final article.
Thank you. It's kind of vaguely related if you want to have like a tenuous little segue, talking about payments. But this is a new report, the Safety, Convenience and Choice, the True Value of Cards report from Payments Europe, has been released, and it is full of information and insights into sort of how merchants are approaching payments at the moment. And one of the things that is found is that 72% of European merchants prefer cards over other payment methods, as well as how safety and security are the main priorities at the moment when choosing payment methods. And I thought this would be a really interesting thing to talk about because basically, obviously, when like the pandemic happened and lockdown and COVID and all of that stuff and everything went digital, blah blah blah. We've talked about this to death, I know. But obviously, everything went contactless, and contactless became a thing, and cards became a thing, and cash has been slowly dying out in some people's opinions. But I really want to talk about this because I thought, right, we're kind of a few years down the line where we're really sort of now into this kind of like digital era when it comes to finances and things like that. Has cash died? Are cards like king, as people say? I thought this would be just a really interesting debate and discussion to have, sort of kind of harking back to ones that we had ages ago and then bring it into now. But back to the survey super quickly. So essentially, 67% of merchants believe that the cost of cards has dropped or stayed stable in the last few years. And so 87% of merchants believe the value of cards outweighs the cost, because I think one of the kind of main negatives against cards is that you have to pay a fee every time someone pays with a card. You have a transaction fee of a varying percent. Usually it's like 1%, 2%, something like that. But that does eat into your profits, whereas using cash is free. So I thought that was an interesting idea. But I think just in general, the idea, we talk about payments a lot and how payments are innovating and diversifying and all the rest. And I just find it really interesting that, even with all this fantastic payment innovation and things like that, people still use cards. It's just a debit card is kind of still kind of people's go-to. Sometimes it'll be a contactless debit card in something like Apple Pay or Google Pay or things like that. But and I know that's an innovation in itself, so I shouldn't be lumping that in with cards. But realistically, people still pretty much use cards for everything. So I just thought it'd be a really interesting thing to kind of touch on with this whole payment innovation and the world of digital and card payments still gaining traction, but are they really? I don't know. I just thought it would be a really fun thing to talk about. So, I mean, Francis, going to throw that to you in my kind of haphazard rant about payment methods. What do you think? Are we fully in card? Is cards king? Is something else around the corner? Do you still use your McClear payment ring, or have you got something else? Like, what are your thoughts here about cards, contactless cash? Let's go.
I won't lie. If it was easier, it's not even that it's difficult, but if it was just, I think logging in simply to the McClear app to upload some funds to the ring is the one thing that stops me from doing it more often. And it's somewhere in my room. I don't know where it is, but I'll be honest, I haven't used it in a long time. But I was using it a lot last year, and it's always the biggest gimmick. And I love going to like the corner shop or something, and they're like, "Do you want to pay by card?" And I'm like, "Yes, I do," and then just tap it with the ring, and it's always very funny, and it starts conversation. But no, I think it's really interesting that everyone is sort of saying that, or coming back to cards now, because I think when you think about innovations and how far they've really come, they're fantastic. And I mean, we talk about mobile payments and paying with Apple Pay, Google Pay, whatever it might be, and it is extremely convenient. I'll be honest, I can't remember the last time I used a card physically to make a payment, just because I've got it on my phone now. I just use my phone every single time. However, I will say when it comes to things like buy now, pay later, or these different pay over time offerings, I guess, I think when you think about a credit card, it's so simple. It's not a thing of, oh, I need to pay this amount this month, that amount next month, or this amount for the next year. It's simple. All it is I'm gonna not pay for this now, and then I'm gonna pay for it a little bit later on this month, or I'm gonna pay for it next month. And I think there's a nice simplicity about using your cards, which you might not normally get otherwise. And yeah, no, I completely understand why everyone still thinks that card is king. It makes sense to me.
Yeah, I completely agree with you, and I think some of it kind of comes down to like consumer expectation. Maybe not that. Maybe that's not the right word, but like things are often led by consumers, and I think this survey as well, this report, sorry, kind of said how merchants do kind of take consumer preference into their decision to use whichever payment methods they're going to use. And so I think that does play a big factor in it, because I mean, why would you do anything like you say with your payment ring? Not to like pick on that, but you don't really use it that often, but you use card a lot. Like, why would you change something if it ain't broke? Don't fix it. And I know sometimes that's like the worst thing in the world, especially when we talk about like innovation and like making changes for the better. The idea of being like, oh, we've always done it this way is not great. But sometimes, if it works, it works. And if people like paying with cards and can pay with cards easily, simply, and safely, then why would things change? And I think that's kind of one of the reasons why, when we think about payments, we still just do think about cards. But I mean, Tom, what do you think? What are your thoughts on this whole debacle?
I think the key point that comes to mind when I think about cards is how actually cards aren't just the concept of itself has continued to evolve over time. Like obviously when cards were first introduced, it was put it in the pin, like in the card machine, put your pin in, wait for it, the funds go over, great, take your card out. Then I just looked it up. 2009, contactless payments were introduced for debit cards in the UK, and then it made it nice and easy. Just tap everything. You only have to put your pin in every few times, and then not too long after that, the concept evolved slightly more. We now have all our cards on our phones, and that's how I pay. Apple Pay everywhere apart from TFL, which is banned my Apple Pay, but we won't go into that. And it's it's constantly evolved, and I think it's an interesting space because as a concept, cards are so well established. We've had cards for well over a decade, and they seem to be here to stay. But they've always had that slight tweak over time where they've stayed relevant. They've stayed the most convenient aspect, and merchants will be used to them. They're used to the security that they offer. They're used to the coverage that they get from the payment companies, and so are consumers. When they spending money, like something that was spoken about a lot yesterday at Open Banking Expo was the fact that consumers are pretty happy with the fact that they can spend money, they can be defrauded in some way, and they can just claim the money back off the bank, and there's no real losers there. And the only people losing are the banks, and it's kind of a system that people are used to and they're quite happy with, to be honest. If someone's defrauded of however much money on the Facebook marketplace, eventually they can claim that money back off the bank. And as far as the consumer's concerned, well, that's it. They haven't really lost anything, apart from going through a pretty sad experience. But I think it's interesting that cards have remained the first and foremost payment option, and I think that's because of consistent innovation. And it'll be interesting to see how what is the next sort of evolution of cards that we're going to see that's going to keep them in that space, or is there something going to take over cards and be a new way of paying? So it'll be a really interesting way of seeing how payments evolve in the next decade.
Yeah, absolutely. I love all of that. I think, yeah, it's just payments are something that's so, everyone uses payments like every day. So I think they're just really fascinating sometimes to actually sit down and actually think about them and go, well, people kind of just still use cards. But like you say, they're innovating all the time. So innovation doesn't necessarily have to be something brand new, which is a really good point. Anyway, that does bring us to the end of our discussion today. Thank you so much, guys, for bringing your articles to the podcast. If you would like to hear any more about anything we've talked about today or anything else about fintech, head on over to thefintechtimes.com, where there are plenty more news and insights on there. But why don't we very quickly do what I learned this week? So each week, so much new information is crossing our desks, being on the editorial team at the Fintech Times, that we are learning something new about fintech all the time. So we thought it would be fun to share that with our listeners. So, Tom, what have you learned this week?
This week, I learnt via a new report from Ravelin, which is a anti-fraud technology provider, that online grocery retailers are being hit significantly by something called friendly fraud, which I thought sounded like a bit of an oxymoron. But that includes chargebacks, promotions, and policy abuse by the online grocery retailers' own customers. And I just thought that was interesting that they're almost being betrayed by their own customers due to this concept of friendly fraud.
Interesting. Thank you. Francis, what have you learned this week even?
So what I've learned this week is that research from Vodeno and Aon Bank has revealed that 52% of 25 to 34-year-olds believe using financial products from their favorite brands is more convenient than banking with a traditional bank. And sort of following on from your article where we were talking about payment preferences, I just thought it was quite interesting.
Yeah, absolutely. That's really interesting. And then what I learned this week was that ClearPay has found that 30% of British adults have used buy now, pay later services to make at least one payment in the 12 months prior to August 2023. I think that's interesting to think about buy now, pay later things. Maybe that'll be an article for a next one, because I think we've got a lot to unpack about buy now, pay later. But anyway, thank you so much, guys, for joining me this week. It has been a pleasure to chat to you, as always, about fintech. But anyway, I'll catch you on the next one.
See you guys next week.
Until next time.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using hashtag TFT News and Views and follow us at the Fintech Times.